Welcome to Tradiers, the Trader's Edge, the critically acclaimed, the show that's been called smart and irreverent. Critically acclaimed. We just keep saying it over and over again. Critics say, well, actually, it's critic. There's not really an S as plural, but a critic claims we're smart and irreverent. How are you, Bobby?
I'm good. I feel like I need a backup so you can read the whole shirt, but
it says it's sauce, not gravy, which is a point of contention within the Italian community. It's the things we fight about. We'll address that at another time.
But we fist fight about it. But go ahead.
By the way, is our guest today Italian as well? I think he is.
We'll ask him.
Okay, we have a great guest.
Definitely not Swedish.
He's not Swedish. But before we bring him in, a lot of crazy shit has happened this week. First of all, Powell walks back to 50 basis points. Of course he's going to. When you go 50 basis points, you got to tuck it back to the middle. Bombs fly in the Middle East. And crude didn't really explode higher, but then it did today. Where did crude settle today? And does this mean the green light for higher?
Actually, I just had that up a second ago. So let me
pull it flirting with our level. Our level's 72.40, right?
Yeah, and it fell off that level. So it ended the day up about 1.62%. But I think more interesting to that is that it essentially over the last 3 of the last 4 days or higher, that's a 4.8% rally over those days. So it fell back against the 50-day moving average. OPEC was part of that because OPEC really, they didn't change anything. And they said they were going to crack down on those who were flouting the quotas. It was mainly Kazakhstan, Russia, and Iraq who were not adhering to the quotas. They all say they're
surprise. Yeah, can't trust those people. Shocking.
They all say they hit their quota in September, but I think that remains to be seen because we're always talking about what they say they produce versus what actually hits the market when we're talking about crude oil. Right. And Saudi Arabia actually said, the Saudi Arabian representative through delegates who talked about what was said at the meeting, that they'll actually engage in a price war with their own members if people don't start adhering, countries don't start adhering to the production cuts. That could mean $50 crude if that happens, $40 crude. So good for the next president. Probably wouldn't happen before the election.
No doubt. Okay, as we've said a million times before, you guys have seen Bobby and I on TV and different media outlets for 20 years. You might think that we're full of shit and don't know what we're talking about. But one thing you cannot argue is that over these years, we've made unbelievable connections and we get very, very high-end people to say yes to coming on our show, and then we ambush them. So this is no exception. We have one of our favorite people. He is a political economist. He has global opinions that are really, really spot on. Let's bring on Albert Marko. Is Marko an Italian last name?
Well, it's spelled with a K, so
that's why I didn't think it was, right?
That's not. It's Italian-ish.
Well, see, my family's from Montenegro. Albanians from Montenegro, which used to be a Venetian province, so there's a lot of mixing of bloods throughout the years there.
Yeah.
Oh, that makes sense. How are you? Everything good?
Everything's good. You know, we just got through this horrific hurricane, and a lot of people in my area has been affected, but you know, we're persevering through everything. So
that's tough. It's got to be stressful. Bobby, how are
you?
It
is. You know, aside from the whole, you know, human part of it and whatnot, you know, economically, it's kind of bleak here for Florida for the next 18 months, just because the entire west coast of Florida's tourism is just going to be dead for the next year. So
unbelievable.
Yeah, it's going to be tough times going forth.
So it's interesting, Jim. I had the same sort of experience that Albert's talking about 2 years ago. Actually, so Helene hit land September 26th or 7th. I think it was September 27th. Mm-hmm. Ian 2 years ago, September 29th, made landfall just above us. Wow. And, you know, it was a 100-year surge, a 100-year storm in terms of surges from the ocean, from the Gulf into houses and businesses and everything destroyed. And it's 2 years later, and you can still drive up towards Fort Myers from where I live and see things wrecked that haven't been cleared up. There's still like a boat graveyard deep into Fort Myers where they just piled up boats that got tossed by the storm. So these things are devastating. They really are. And you just get lucky and you just wait for the time that it hits. I live far enough away from the water, and that was a deliberate choice. A friend of mine said to me when I moved down here 4 years ago, how close are you to the water? I said, a 15-minute drive without traffic. He goes, oh, you're far from the water. I'm like, I used to be a 2.5 fucking hour plane ride. What are you talking about?
So, yeah, now
I take my car 15 minutes. I'm at the beach. I take my bike half an hour. I'm there,
Yeah.
So, but it is, we had Ian here, and I don't know how it was for you, Albert. When Ian hit here, we lost power for 45 minutes. We lost internet for 3 days. That was it. We had to replace one screen on our outdoor screened-in patio outside. The rest of it was all fine.
Yeah, it's just crazy because I live about 1.5 miles away from the water, but yet it's high enough and far enough that I didn't lose power. I think for like 10 seconds, right?
Yeah.
But I'm thinking like the second and third tier effects of what's about to happen to Florida. All those service industry people are going to be losing their jobs for the next year. The amount of apartments and for rentals is going to be affected, both ways. Prices will be going down, the shortages will be going up. It's really daunting when you start thinking about it for the state of Florida. And I'm not even starting talking about Georgia and North Carolina, which has been absolutely like biblical level event over there. So I mean, how's the housing market in that area going to be affected? Are companies like Home Depot and Lowe's going to get a big surge? The cabinet companies, I mean, all these things are starting to go through my head, just trying to put away the whole human aspect of everything.
Yeah. So before the storm hit, we were talking and I wrote something up and I tweeted it that I deleted it and I was embarrassed about it. And I tried to explain what it was because I was talking about federal money being spent because the property damage part of it, I do somewhat think should be a matter of the person and the insurance company that underwrites it. Now, the humanitarian part of it is wildly different. I thought people might not understand what I was saying. I think the federal government should be poised at a moment's notice to go in and save people's lives and make sure they have food and make sure they have water, make sure they have blankets. I do think that the federal government shouldn't be bailing people out and spending money. Am I cruel in that assessment, do you think, Albert, or no?
Some sort of safety net for the more, unfortunate people, but the military and the National Guard on the state level should absolutely have disaster plans in progress here. Like
that we agree on 100%. I think they should be getting out there. Yeah.
Well, without 100, I mean, there's people in North Carolina that are running out of food. Why aren't we dropping MREs? From helicopters and stuff and whatnot. Why aren't these things happening already?
I'll pay for that any day. Yeah.
When it comes to the financial part of it, I mean, I'm kind of 50-50 on that. I don't want a government that's overly paternalistic and people just rely on it and then get into that habit and fraud starts happening. And, there's a lot of negatives towards that, right? There's a lot of negatives.
Yeah.
And I do agree somewhat that I'd like to keep the government's hands, off of that. But, this is the world of politics, and politics like to bribe and pay people as much as they possibly can. And it's,
Donald Trump likes to do it too. He loves to ride in a white horse.
This is not a this party versus that party thing. This is just a normal political, reality from both parties. They'd like to spend money and sprinkle it around.
So we, in the Tradier rundown, which is the thing we do before you came on, so you didn't hear it, we were talking about Stanley Druckenmiller being short bonds to the tune of 15 to 20% of his portfolio, because he contends that both of the potential presidential candidates are spendthrift. And I agree with that part of it. Do you agree with that? Do you think that the spending is going to depress the price level of bonds, shoot 10-year yields up?
Oh yeah, I agree. I totally agree. I think bonds, but my view of it is slightly different than Drux, and I'm sure he knows this too. But the actions of Janet Yellen of using the bond market, specifically the long bond, to rally the markets has just gone berserk, and there's just no way that we can see long bonds. I usually look at the ZB, right? Like at 128, it's just silly. You know what I mean? Yeah. It's just absolutely silly. So yeah, I do agree that
Yeah, I've been long a steepener on and off. I've traded around it since like negative 60 basis points, 2s to 10s. And I think, the historical average is like 107, 2s to 10s. I think we overcorrect to about 150, then come back to about 100. And then I think that we could be seeing long end yields 5% to 6% in 6 months to a year's time. Do you think I'm crazy?
I don't think you're crazy. My personal view is that Harris will probably win, and big inflationary event, and they're going to have to correct for it.
Yeah, Bobby.
I got a question. Actually, I'm not even sure this is a question. Yeah, I'm going to just put something up from Tim McLean. The second post up there, Ringo in the background. I guarantee you'll see a 200 billion Fed government bailout on Helene victims before the end of October.
Right.
I'm not sure. I'm not sure because politics are involved this time.
Yeah, but you need congressional support for that, and they have to call emergency sessions. And so close to an election, everyone's campaigning. I don't think that happens that fast.
So if he had said I see a $25 billion bailout for Helene victims, what would you have said to that?
It would have to be some sort of executive order, possibly,
Yeah.
right? I could see that. You start getting into the hundreds of billions, and then it starts affecting the Ukraine funding. I don't really want to do that. Yeah. I mean, I joke, but but not really.
Okay, there was something I read today, and I have no idea if it's valid or not. Because as we know that FEMA has changed the way it wants to disperse any sort of disaster relief, particularly for minority, I don't know, some DEI bullshit thing. Now, that's fine. It's idiotic. It's just the government does idiotic things. However, I read today that they were stepping in the path of private distribution of donations to try to get them to go along the same channels. Did either of you two read that as well? Or they could be pulling my leg.
I don't even need to read that. I know that happens.
Really? Private charities are like, no, you can't give them here. You got to go give them the poor.
Even the private charities have to use some sort of government system to distribute, whether it's roadways or permits and so on and so forth. And for sure, they're going to sit there and say, well, you can get your permits or you can use this area over here that's more politically advantageous to us and not this one right now. So yeah, I mean that happens. It's not out of left field.
It's the craziest thing ever. I was in New Orleans 2 years ago, and they had a hurricane like 8 months before I was there, and there wasn't any roofers there to fix houses. Everyone had those big blue tarps over their houses. And some of my friends there were saying there are so much regulation, restriction of coming into New Orleans with a crew and being able to just start working. Like, what the hell is government for? Then when they keep people from rushing the invisible hand of economics, yeah, you might have to pay a little extra money, but I'll fix your house and nobody else is gonna. It's just crazy bullshit, right?
You know what I think the problem is with that specifically. I mentioned roofing, and I have a Florida issue to bring up about that. The insurance rates in Florida obviously have skyrocketed. Everybody talks about the high insurance rates for homeowners here, but a lot of that was due to fraud in the roofing industry, right? And it decimated the insurance company's bank accounts, right? Just roof. If you put it on a roof incorrectly, it's going to ruin the entire house, right? So I understand why. On one part, why they would be very strict about like roofing and certifying the roofs and permits and so on and so forth. But on the other hand, if you're the mayor of so-and-so town and your constituents that vote for you 80% of the time are on one side and the other constituents that vote for you 10% of the time are on this side, well, you're going to direct things to one way or rather than the other. It's just human nature to do stuff like that.
So I want to read you guys something from George Gammon, who is at George Gammon on Twitter. I've never engaged with him much at all, but I don't follow him. Just somebody sent me this, and I thought it was a good thing to bring up, specifically to you, Jim, but Albert, you as well. Mm-hmm. Here's what he said. Unfortunately for Americans, there's not enough U.S. treasuries, so the government has to increase deficit spending to keep the global monetary system from imploding. It's a modern-day Triffin's dilemma. Treasuries equal collateral. There's so much demand for treasuries. There's a collateral multiplier. How many times is one treasury used? I can't say this word. Rehypotheticated.
Good, nice help, Albert.
It's rehypothecate. Thanks for
rehypothecate, right?
Yeah. Here's a study from the Fed in 2018 when deficits were 3.7% of GDP. So lots of supply treasuries coming online, and multiplier was still 7 to 9. Experts I've spoken to say they've seen 20 plus times. Bottom line, U.S. government will likely have to run higher deficits to support the global monetary system. So the risk isn't that there are too many treasuries, but too few. Now, instinctively, I read that and I'm like, To me, that has to be wrong.
So
But
I've been in a bond trader for 35 years. If there's not enough, I mean, we have to run deficits. We have to, if we are going to be the arbiter of the world's trade and the steward of the world's reserve currency, we have to have a robust amount of bonds out there in the system. But isn't what we're talking about, aren't we getting to a point where we're tipping the scales the other? George clearly says no. I say yes. And Stanley Druckenmiller says yes. I like George, by the way. I do know George. I'll see him again in New Orleans in a couple of weeks. But I don't agree with this. I agree, as far as 3-month bills, they've flooded the world with those. There's shit ton of demand for those. That's fine. But the questions are going to become, are people going to want our 10-year? Albert, what do you got?
See, ordinarily, I would say there aren't enough, right? And with the current situation going on. However, because Asia and Europe are in hibernation status, right? I can understand why there is enough at the going rate right now, at least for the next 12 months. After 12 months, you're talking about, I think the dollar goes down. I think emerging markets start coming back up, and then there might be a problem about shortages. In that case, I do agree. But I'm in the middle right now, only because the Asian markets, the Asian economies, and the European economies are just basically non-existent at the moment.
Right, and China doesn't want to buy our bonds. We're not going to be holding hands with Russia anytime soon. By the way, that is another thing too. Let's talk about the international ramifications of what's transpired over the last 3 years. Are we ever going to start strengthening the ties that bind with China again? Or is the momentum of us pushing them away and trying to relocate our supply chains, is that a next 10-year sort of thing, or is it just a new president sort of thing?
Well, listen, the United States and Yellen and the Chinese and Beijing at the very high level, they still work together. As much as the bluster you hear, political rhetoric thrown, back and forth, they do work together because they know that they have a symbiotic relationship for the most part, right? Problems occur when, trade issues pop up, whether it's automobiles, solar, so on and so forth, right? Those kind of issues do pop up. I do think in order for the United States to artificially keep these markets rallied up high and on this plane, that they still have to step on the neck of the Chinese economy. What the Chinese do to counter that is, I don't really know. I mean, I do think that they're probably, stockpiling gold, probably 3 times the amount that's actually reported, in an effort to counteract any kind of U.S. actions for the next 5 years. I do think that's happening. In fact, I know that's happening. So it's really a give and take. We need to see who wins this election. We need to see what cabinet level positions are filled. I want to see whether Gensler is the Secretary of Treasury, right? And I want to see if Brainard becomes Fed chair. I mean, there's so many pieces that have to fall into the political arena first to really make an assessment of what the U.S. and China trade problems will arise.
So before I want Bobby to ask the next question, but I want just that Albert's last question. Just think of it. This is a market show. Just think of the markets that are going to be influenced by what transpires over the next 3-4 months. Gold, you mentioned. Bitcoin. Yes. Donald Trump wants to have it in Treasury. Bonds, we're talking about how much they're going to spend. What else? Obviously, equities too. This is an amazing market time when you see what's going on over the next couple months.
Yeah, I mean, you're talking about massive swings that can make your decade, not just year. Right. I mean, your entire decade. I mean, I talked to some big hedge funds, and a couple of their partners are partnering with me in a couple of other projects. But they speculate in gold, 3,500 or north of that. Right now, I do think that the U.S. government steps in at north of that to suppress it, like they do with all commodities. But still, I mean, what are we at? 2,700 today? 2,700 change, whatever it is, right?
2680.
Yeah, 3,500 is a big jump.
Yeah,
right.
Bobby and I have been accused of being gold bugs over the last 2 years.
I don't even like gold, right?
Yeah.
I don't like the damn thing.
I do,
right?
but yeah.
Yeah, I mean, to each their own. I personally, I'm a fiat guy with U.S. reserve currency, military power. That's my thing. But the fact that I even have to talk about gold goes to show you how important it's going to be the next 5 years. Yeah. Right? Everybody that knows me knows I just hate the damn stuff. right?
Yeah.
But I have to. I sit there and I'm buying gold watches at sub, at market value, the gold market value. I'm sitting there looking at like gold miners. I'm like, oh man, it's so much gold in my face right now, and I have to do it.
Yeah.
Have to buy it.
What's the mechanism by which they suppress commodities?
New York Fed has a trade desk of 200 people that do it versus in futures and whatnot. They can put out news articles. They can suppress it in futures. Listen, they have a bank account that doesn't have to report losses. That's just the bottom line. We are the world superpower, the issuer of the reserve currency. To think that we don't have a hand in every single corner of the market is a little bit naive.
Yeah.
Right. I mean, come on. If we have oil going up to $200 next week, you don't think that the U.S. would step in? Of course they'd step in.
Yeah. So I have this sort of theory that I'm working on that I haven't quite flushed out yet. I think the U.S. empire is ending. Now, let me qualify that by saying I'm not sure I'll live to see it end. Right. But I think it's
declining, then you're saying then
it's declining, but it's declining towards its end. It's not declining like gold declined today on its way back to 3,000, which was my target, 3,500, according to some others. And I hope it gets there because I have a lot of it too. I found myself accumulating it almost accidentally. And I'm like, what am I doing with all this stuff? Wait, it's worth what? So then I just kept doing it. But I have this theory because, and to me, the trigger point, like if I go back in time and I say, what was the trigger point where I personally started to believe it? It was the US just exiting Russia from the SWIFT system when they invaded Ukraine. And it goes along with the Canadians taking the money from the truckers when they were protesting. What part of just the short little bit that I've said is nuts?
It's not. And, these are policies, short-term, short-sighted policies by Yellen and others that needed to do something to help out their political situation. Now, do I think the reserve currency is going to end in 10 years? No. Do I think it's going to end in 50 years? No. But what they've done is certainly cut the lifespan of it by 20, 30, 40 years. What date that is, no one can really tell the future because there's a lot of components to being the reserve currency issuer. So, but you are correct in assessing that what has transpired over the last 4 or 5 years has shortened the life of the reserve currency by about 30, 40 years.
Yeah, I liken it to a 25-year-old that's smoking 2-3 packs a day.
Yeah.
Right.
There
How are you
you
going to get them to quit?
Yeah.
Right.
Yeah.
They're making their own money. They're buying their own cigarettes. Can you get them to quit? And it's addictive, just like some of the just horrible policies internationally and domestically that we're engaged in right now.
Yeah. The only thing that we can, the only thing that counteracts that would be that the U.S. still has a military that's so far dominant than anybody else. But of course, you need money to maintain that, and you need troops, and you need proper policies, and all those things seems to be on the decline, right? So we can sit there and have an entire 3-hour episode about the reserve currency and the superpower status of the United States on the decline, which I do think it is. I think the peak of our society was early 2000s, mid 2000s, but now it's just like you see these ridiculous policies economically, socially, and I mean, what more can you possibly say when you see it leaking into Europe and Asia and all these all these political driven events are just laughable.
Crazy. Yeah.
Crazy. It's insane.
So you talk about the dominance of the U.S. military, and I don't think there's any thinking person that doesn't realize how dominant we are. Like it's leaps and bounds. There may be countries that have as many nuclear warheads or more than we do, but just the sophistication of our military is just off the charts. But Iran, Israel, Ukraine, Southern Lebanon, Yemen, at what point are we stretched past the point where that dominance matters?
Well, so I when I get into these discussions, right, when people point towards Afghanistan and Iraq and blah, 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 there's two things that you have to look at. One is the effectiveness of the United States military decimating the opposition, which is unquestioned, right? And two, nation building, which is asinine, right? The way we do it is absolutely asinine, right? I don't think anybody at all can challenge the United States in terms of head-to-head military engagement, just strictly blow for blow. It's not possible right However, the amount of mistakes the United States makes, the amount of money that's spent to cover up those mistakes, the soft power and the diplomatic corps that make, you know, just bumbling mistakes left and right, are taking a bite out of the apple that, you know, is getting smaller and smaller each decade, right? And it's when you leave places like Afghanistan, you leave places like Iraq in a hurry and erroneously, it takes you 10 times more manpower and money later on to acquire to regain strength in that region, which we all know affects trade and so on and so forth, right? So, you know, like I said, I can go on and on about this, but I don't want to like take up 45 minutes of.
Well, I want to follow up with, because Tim McLean's a fan of the show and he also lives by me. So the next time you're in the area, you can meet him as well. He says, so if the U.S. is on the decline, which I agree with, who will take over for the U.S.? Ringo, if you can put that on the screen.
So this is something I've theorized long and hard about for the last maybe 10, 15 years, right? And what would be the stages of a declining U.S. superpower and an ascending next power, right? I don't think the Chinese can do it. I don't think the Russians can do it. I think the next step would be an Anglosphere joint union, like a Commonwealth between the United States, Australia, England, so on and so forth, right? They're just the Anglosphere countries, basically the Five Eyes. And they probably end up creating a digital trading currency based on whatever, gold, currencies, whatever they decide.
You said the Five Eyes. Can you explain that real quick?
Five Eyes is the intelligence sharing operation.
Oh, yeah. I know exactly what it is now.
Yeah, so that's what that is. I think it would be Five Eyes plus Japan and maybe France. Or whatever.
That brings me to my next question. Finish up, because I got a good one.
Yeah, so that's like if the United States is on the decline, the next logical step would be the United States plus allies in some sort of commonwealth of a military / economic joint union.
So, okay, so you mentioned the Five Eyes. So I want to pivot for a second here to big tech. It's a conversation about 2 years ago, and I'm with two buddies of mine who are both in the tech industry. And I started talking about Google and what the reasons I own Google. And then they were like pushing back on a point I made. And I'm saying this is the most asinine thing that people don't think this is true. Let's say the three of us were the head of the CIA, the head of the American Intelligence Agency, or really any of the Five Eyes. And Google all of a sudden comes out, and whether or not they were involved at the beginning is not part of this point. They may have been, they may not. But all of a sudden they're better at gathering intelligence, gathering usable intelligence on every person on the entire planet. And you want people to believe that the CIA wouldn't go and infiltrate Google? That's asinine. We'd be completely derelict at our jobs if we were the heads of it and didn't go in.
Well, Google, Microsoft, and the other big tech companies have a seat on the National Security Board. So I don't know what that guy was talking about.
What was he even talking about? Yeah.
Yeah. No, of course they're integrated with the NSA at very many levels. It's just silly to think that they're not. I mean,
of course. And if the leader of the CIA didn't do that, he should be fired. The fact that he did do it is awful. I mean, I don't want this level of surveillance, but always governments throughout history, the only thing that they ever lacked was the power to 100% surveil in order to push their agenda. Why in the world, now that all of a sudden it exists only over the last 30 years, people should be shaking their shoes a little bit more than they are? Am I crazy? Am I a tinfoil hat guy?
No, you're not crazy. This little device right here is
cracking the hell out of us.
An example of listening to everything you would log in where you are. Listen, if you go and kill somebody, they find out from the phone company where your phone was paying.
Yeah,
right?
You can't even kill anyone anymore.
Yeah, I mean that's just from the basic for the local authorities. Let alone if us three were terrorists, and what they would do with us in our Google search history. It's silly.
Is there an investment thesis based on? I mean, we've already seen it, right? I mean, that's the Mag 7, correct?
Yeah, well, actually, there is an investment thesis. Obviously, big tech is the Mag 7 are fully supported by government pump operations. We can, obviously, right?
Obviously,
yeah, right. But so like you said, the Iran-Israel issue. Yeah, well, there's big tech companies in Israel, right? I think Mobley or some. I think that's one of them that one of my guys was looking at. It's like, hey, listen, if they're gonna be in this like constant back and forth with escalation between the two countries, of course, they're gonna be looking at surveillance companies and big tech companies out in the Middle East, of course.
Yeah. So it's interesting. Yeah, Bobby.
Yeah, I want to go. I know that we've got limited time with Albert, so there's a bunch of comments in here. First of all, I want to put up Tony Nash's comment because he's a friend of all of ours, which just made me laugh. Um, he says, what? The New York Fed has a trading desk conspiracy theory. I just thought it's hysterical.
But I'm not a conspiracy theory anymore. All my conspiracies came true, Tony. And by the way, the coffee you sent me was wonderful. Thank you so much, Albert.
Yeah. See, so when two countries want to conduct trade, right? Japan and Sweden, right? They don't trade directly with each other with their currencies, right? This is what some people have to understand, right? Yen goes to the New York Fed, gets converted to dollars, which then gets converted to Swedish krona and gets sent to the Swedes, and vice versa. That's how it works, right? So the New York Fed has eyes everywhere. You want to talk about a big tech, surveillance system? The New York Fed's it. I mean, that everything flows through there. Every trade, transaction, so on and so forth. So yes, they do have a trading desk on top of everything else.
Yeah.
So I've got a couple of questions. I'm sorry, Jimmy, but I want to get these questions in.
Get them out. Go ahead. We like the internet fan stuff.
Comment from Hudson resident. Did Albert say that the Fed trading desk is in fact manipulating markets? I'm not sure if that's how you word it.
Short answer, I think, Albert.
Yeah, I mean, that's not manipulating markets. No, the Fed trade desk, works to suppress commodities at will whenever they see an issue, whether it's, directly in the market or using proxies. Of course they do that. I mean, I believe, Harold Melgren and I used to talk often, and he told me a great story about when the United States was having issues with the Soviet Union, and all they did was call up 5 of the leading American agricultural companies and stopped all shipments to the Soviet Union, right? And they started jacking up the prices on them. So of course the United States, being such a massive superpower that it is going to touch everything in the market. I don't care what anybody says, thinking that this is a free market. That is absolutely asinine, right? If there's an issue, if the U.S. says that there's an issue, they'll just say it's national security and do whatever they have to do in the commodities market.
Can I add to that answer a little bit too?
Yeah,
of course.
Listen, let me think about it. Think about it this way. What's the one asset that everything else kind of trades around? The cost of money. Interest rates.
Of course.
I mean, we know full well they tell us that they're buying bonds or they're not buying bonds or they're selling bonds. The Fed and the federal government. And by the way, I put no distinction between the Fed and the federal government. They serve at the pleasure of the government. You can call it, they're not in bullshit. They're independent. And they literally manipulate the price of bonds, which then has a ripple effect to manipulate the price of everything. So we are not a free market economy. We are freer than some, but it's still not at all. And that, by the way, what do you think happened in the housing crisis? They manipulated the prices of housing for 20 years. And then all of a sudden, what happened? The bottom dropped out. So the answer to this is a very, very resounding yes. Of course, they manipulate markets.
I was personally told by a former Treasury Secretary, which I won't name, but that their primary job was to manipulate the long bond. That is their primary job, is to do that.
It's amazing because it's things like traders like us are always looking at interest rates, and you run into retail guys here and there, and they're like, what do you talk about interest rates so much? Well, because it's kind of the thing.
It's the center. Yeah.
It's kind of the thing. Second part of Hudson's question, does the Fed trading desk prop up equities and futures? I know the answer to that.
Yes, of course they do. And they have a script, right? There was a very obvious script. Once you actually saw it, is they would let oil run up, they would crush it, that would boost bonds, and then bonds would boost big tech, and big tech would rally the market. It was a simple equation. You can see do it over and over and over again using Mag 7 and volatility. They smash the VIX, they smash oil, and the long bond would rally, and markets would rally.
So in August of 2017, the Fed was considering tightening rates on a Monday. I think it's James Bullard, but it might have been one of the other guys, came out and said, yeah, Fed's looking at tightening rates, whatever. The stock market cracks to the tune of about 8%. Thursday of that same week, the case for tightening rates is much less compelling now. Well, yeah, because the stock market broke 8%. And now all of a sudden, like, oh shit, we got to support the stock market. So the answer, of course, I don't even care if they buy stocks. They probably do buy stock, but it's not even the point. The point is, of course, they manipulate stocks through bonds.
Yeah, of course. They can call up their proxies, and they can call up their hedge fund proxy boys, and they could do it for them and fill them. They have back doors to fill them in any which way they want.
Well, I believe 100% that they do that. I'm just saying they do it no matter the things they do that are out in the open are just as bad. Yeah,
of course.
So I got a question from Tim in here that says, so if the U.S. is on the decline, which I agree with, who will take over for the U.S.
But then we already talked about that.
Yeah, we already talked about
we
this.
answered that, right?
I don't think anybody alive here is going to see the United States not be a superpower, but it's important to start, especially for traders, is you start looking at like what mechanisms are being put in place for that event, right? Whether it's a BRICS, whatever currency, or the acquisition of gold by central banks and so on and so forth.
It's really, we have some funny ones in here. Hold 10 for the big guy. As one of our viewers' names. Hold 10 for the big guy kind of commiserates with Albert. He said, I really wish the best parts of my portfolio, best performing parts, weren't gold, silver, oil, etc. I don't know. I don't know if I agree with that. I like when commodities are rising because they're somewhat indicative of a stronger economy.
Well, no, but that's one out of those three, though, Bobby.
Yeah.
Oil, I agree with you on that, but gold and silver,
Well, silver has moved up. Like the correlations have been pretty flat over the last 10 years in terms of what silver correlates with. But in terms of oil, oil can often be like, it's really always a three-headed monster, right? It's not just oil's up, so the economy is doing better. Sometimes it's oil's up, and that's a stressor on the economy. Same thing with gold. Sometimes gold is rallying because we're in a reflationary environment that the Fed is not fighting, which is what I think right now. You know, save for all the other China compiling gold and whoever else is accumulating gold. To me, with this rate cut into the economy that has a fair amount of strength, in my view, you're asking for inflation to head back up above 3.5%, which is part of the reason I think the long bond's been strong. We talked about that a little earlier. Part of the reason I think Stanley Druckenmiller's right. Part of the reason. Everything's always a three-headed monster. It's never just one or the other.
Yeah, that's the mistake a lot of people make. They take one thesis and they don't understand that it's a double-edged sword going both ways. You know, you just got to be able to trade it properly. And I do agree with commodities rising. I think me and my partners, our view is that the U.S. dollar will probably head into the low 80s, high 70s. So, I mean, whatever that does for oil and gold, so be it over the next 12 months.
So tell me this, Albert, because I know you got to leave relatively soon. Hopefully not within the next.
I'm gonna stay. I cleared it. I'm just gonna stay.
Oh, good. Okay, tell me this. Pick 5 positions you'd look at for the next, call it 2 years. What do you think is going to do well over the next 2 years?
Obviously gold. I mean, that's
obviously, yes,
obviously
I agree.
There's no question about that, right? Crypto. I'm not really. It's over my head. I don't really pay attention to it, so I'm just gonna leave that alone. I do think.
What if Trump becomes president and instructs the Treasury to buy?
I don't think the Treasury is going to get.
I don't think so either. Okay, moving around.
We talked about that when I was on with you guys, Albert.
Yeah. So agriculture, I like meat and potatoes type of stuff like Mosaic, right? People got to eat no matter what. You can live without upgrading a phone, right? You can't live without eating, right? So you need stuff like fertilizers and whatnot. And I do like Mosaic a lot. I think their phosphates are not only doing the agriculture business, but I think their future is phosphate iron batteries, which are more efficient than lithium. So I think that's another one.
Do they pay a dividend, by the way, Mosaic?
They do.
Yeah.
They do pay a dividend. Yes,
okay, I'll look at that for sure. What
else? I like transport companies like Park, Ohio, which is like they transport auto parts, right? I don't necessarily think the auto industry is going to be regaining anything. However, they still need parts to move back and forth to the factories to support those jobs, which I do think in the next year are going to get some kind of government bailout or stimulus to support the auto industry and the manufacturing sector, right? So
can I add something to that real quick too?
Yeah.
I just had to buy a new car because my wife's car got stomped a couple of months ago.
Mm-hmm.
New cars suck. New cars are awful. There are so many bells. And by the way, I've done some research on this. I am not alone in thinking this. I believe people are going to keep their mid-teen level model cars for much, much longer. So I think car repairs are going to be a big deal. And you get this feeling like it shuts off when you hit the gas. There's all kinds of bells and whistles. I've had it for 2 months. I don't know how to work it. And I'm not a dumb guy. And you have a feeling that it's reporting back to central command on you all the time. I guarantee that it is. And they're like, shit, why does that guy drive so fast? By the way, I'm paying attention, guys. But anyway, so I think that the car parts thing is beautiful. I did not mean to interrupt you. I just wanted to add
I car parts and Copart, those salvage yards that recycle parts. I think they're a pretty good investment. As the recession kicks in over the next 12 months to 24 months, people are not going to be buying brand new cars, but they're sure as hell going to be fixing their old cars,
Damn right.
in mass, and especially after this tragic, disaster of a hurricane. There's a lot of cars out there, right? They're going to need either fixing or being, salvaged for, quite a healthy profit. Utilities, I do think utilities are going to be
just because demand.
Yeah, demand's going up. I mean, it's just, it always goes up. It just keeps gaining, I think, like 3 or 4% every year. I mean, it's just, and nuclear power is coming back online, but, the utility companies are going to get federal bailouts also to help lower the cost to consumers into a recession. So I think utilities is a pretty decent play. Other than that, we're really looking at China, to be honest with you. I mean, China was at the bottom of the abyss. I mean, they were looking over the edge of an economic abyss, and it's not just me, but, a lot of people in the hedge fund world have been trying to position themselves for the last 6 months. I mean, I've had multiple meetings with a few of them, and they're just, they've been doing this for about 6 months now, positioning themselves.
So how do you, when you look at China and you say you want to be long China, the names, what's that?
The A shares.
Just the I shares. Yeah. Because that gives you a broad look at it, right?
Yeah. I'm not playing the games with the accounting in the Chinese markets at all.
Well, that's right. You buy one company, all of a sudden you realize, oh shit, they were lying to us.
Yeah, exactly.
Bobby?
So a couple of things. For those of you in the chat who are asking questions, we really had like a kind of a geek in the chat. I don't know why. They're out of order and they're all over the place. If I missed something, I apologize. If you're asking questions on Twitter, I'm watching it on my live stream, and somebody with a handle MEM said that they are troubled by rising interest rates for 5 years. What do you think? I don't know what he or she means by that question, or they.
I don't know. I think English is a second language, I think, because sometimes they're worded differently.
Pretty positive of that, but you guys have an idea what he might mean?
Yeah, so I think he means China and the interest rates in the United States, and he's absolutely right. The Chinese were not ready for 5% interest rates for the long term. It just wasn't in their playbook. They didn't think that was possible, and they got caught off guard. I do think interest rates are going to be going down. What that does in 24 months is a different story. But for the next 12 months, I do think that interest rates are going down, which will help the Chinese markets.
All right. So Final Fantasy Nomics. I don't want your comments up here because I don't know what you mean by them. But if you clarify, he says he's giving an easy story. Don't let him off the hook. But I'm not sure what he means by that. Because, again, it could have been any one of us said something.
What hook?
We don't know what hook, and we don't know who he is.
Don't let me. I'm sure I've seen him before. He's directed at me. Don't let him off giving the easy answers. I mean, I'm pretty open about what I've said about trade desks and
we talked about the CIA. We talked about trade desk manipulating markets. What do you want from us?
I don't know. I'm hiding the aliens over here so you guys don't see.
I got a sniper trained on me for getting too close to the truth.
A couple more quick ones. Hold 10 for the big guy is very happy that we like his Twitter handle. He worked hard on it, so that's always fun. Final Fantasy said you guys are too late. He's doing the same every time, so he's one of your trolls, Albert.
Yeah, whatever. I've got plenty of them.
Widge said, agreed, Jim. Can't see myself buying anything new for the rest of my life. No need for these bells and whistles. And then we got a question from Tim McLean again. Tim is just a very good fan of the show. Are you a nuclear uranium fan? He already knows I am. So you guys,
I am too. It's the cleanest, most stable energy that we can have at the cost efficient. I don't understand why people think otherwise. I mean, yeah, we've had some accidents, Fukushima and whatnot, but those were like, earthquake related. But, by and large, nuclear is safe, consistent, and cost effective. Simple as that.
Yeah, there's no question about it. I have investments in it. I plan on increasing that as well. I want it to be a big position of mine over the next few years because I think it is asinine that we phased it out because of a couple of headlines. The green people, they don't know their ass from their elbow. You can slap them with a new technology and they'll run away from it.
Yeah, I actually saw this statistic where the rate of increase of energy demand compared to solar panels being made. To be able to keep up with that demand, the size of Russia landmass would need to be covered in solar cells.
So are you suggesting that we take over Russia and cover it with solar panels?
Might as well at this point.
We might as well.
Let me ask one main question.
Sure.
And I don't know how deep we want to get into the specifics of this, but I think a wider Israeli conflict affects markets. dramatically. Where do you stand in terms of the odds of it getting to that point? One of the things we've talked about a lot is that you actually had to have an oil producing nation be directly involved.
And now we do.
Now we do.
Yep.
That's why Jim asked me yesterday if I was surprised that it didn't move higher. And I wasn't surprised because there's going to have to be an actual attack on oil facilities. And there's going to be pressure on Israel from the US and others not to do that, especially going into the winter. So Europe's going to be involved in the pressure on energy, any sort of energy problems at all, and any sort of price increases in those areas. So where do you stand on that? Use any scale you want. What's the chance of an escalation that matters for markets?
Slim, maybe 10-20%. I personally think that these skirmishes are nothing more than choreographed nonsense, right? I mean, when Iran is telegraphing to 5 nations that they're about to launch rockets, that's not a retaliation. That's choreographed.
It's
right?
a fireworks show, right?
It is a fireworks show, right? The issue I have is there's no one in the Middle East that can move militaries to attack anybody else. I mean, sure, you could throw over a few hundred rockets, but Israel's Iron Dome will make short work of that. I mean, Turkey came out and said, we're going to send troops and invade Israel to protect Gaza. Ain't doing that. Turkey doesn't have the military for that, right? No one's got a navy. No one's got the Air Force except for Israel to sit there and conduct warfare, right? Jordan and Iraq both said that they would stop any kind of air attacks from both Israel and Iran. So it's just like until Iran and Saudi Arabia decide to go at it, right? Then we can talk about a Middle East problem, right? That's a very serious problem just because of the oil producing area in the Persian Gulf and whatnot. It's just it's a serious problem between the two. The Israel-Iran thing. What's that?
For both of you, do you think that the Abraham Accords has something to do with the fact that this is not expanded in the way it may have 10, 15, 20 years ago?
Out of my depth on that one. You have to go, Albert.
I don't think so. I think this is more about Iran and Iraq and the Saudis liking where they are in the oil trade, liking that their market share to the Chinese and the Indians has gained significant traction since the Russians have been knocked down a little bit. I think that is really deterring much of their willpower to sit there and actually expand something, to where it would be a problem.
Bobby, I have a question for you.
Sure.
You know full well that if I get a settlement over 72.40, 72.50, I plan on over the next few months increasing my exposure to oil and oil names quite a bit. Fill in my bull case if it has nothing to do. And I know that, as my advisor, what's my bull case? Is it a Kamala presidency, perhaps? You think what could drive it higher? Because my trade is mostly technical. Yeah.
It's difficult because a Kamala presidency, in my opinion, reduces economic growth. Which reduces oil demand. Your bull case is China recovering, the Chinese stimulus working. And that's the thing. I called that stimulus package a bazooka, but similar to a bazooka actually needing to hit an oil production country in their oil producing area to disrupt production, that bazooka actually has to work to stimulate the Chinese economy and stimulate China demand. So without China demand in there, our demand is fairly stable. But India has fallen and China has fallen dramatically. Those are 3 biggest consumers. So without the Chinese stimulus working, which we don't know if it will or won't, I'm going to guess it will. That's your bull case, though.
Okay. I'll take it. Albert?
Yeah, I agree. I think the Chinese is a key component in the bull case in the oil market. But on top of that, even if Kamala's in there and she suppresses, economic growth, she's going to be catering towards, the green movements and the progressives and really hurting, United States production going forward. So it's a little bit of a give and take there. I would feel very comfortable buying oil in the high 50s, low 60s.
Okay. So you see, I'm waiting for the breakout to the upside. You like buying it on a pullback, which I think is really interesting. Let's talk about the broad equity markets for the next couple minutes. Is that okay with you guys?
Yeah.
Okay, so we tried to make new highs in the S&P. We're having a little bit of a difficult time. I personally am still bull. I think I need a trade above 58.40, 58.50, which is last week's high to kind of confirm this move higher from a technical basis. From a fundamental basis, My thesis is pretty simple. There cannot be an everything bubble. If everything's rallied 40% almost equally across the board over the last 2.5 years, they haven't really rallied 40%. Your dollar is 30% cheaper than what it was. And that happens to be the commonality that all these assets have, is they're priced in those cheaper dollars. So I'm fine with the stock market at this level. What am I missing?
Not much, really. I mean, the only thing, the thing I look at is the validation of Kamala win when the market's rallying by whoever decides to drive it up. I think that we can actually touch 5,900 or even 6,000 just right after the election. Now, after the election, I wouldn't want to be long in the markets, to be honest with you. You know, probably getting out in November, late November, early December. But
when you say getting out, just putting on puts, or actually literally
puts. I would have puts on.
Yeah,
I'll have long dated puts into June or July.
That actually makes sense. Bobby, what do you think of that question?
It's interesting to me because earnings, I think the fear of a recession has gone away too much. I really do. Much too much. And, you see it in the VIX, you see it elsewhere, you see it in options. You don't see the pricing where I think it should be. And I think probably today it's correct. But over the next few months, I don't think it is, because the Fed is cutting rates. And we talked about Powell walking it back a little bit, but nobody would argue that they're in the process of cutting rates further than they are now. The market may be pricing in way more than they're going to do, but still rates are going to be anywhere from 100 to 150 basis points lower than they are now, which does drive spending. I saw a home builder recently email me and said that they've bought rates down to 3.99%. Tim might have something to say about that. The new home builders are already buying mortgage rates down to that level, right? I bought as rates were going higher, and that's full 2% lower than what I have right now. Now, I can't refinance because that's not the market rate. That's new homes. Right. So you're going to see some stimulation of growth in the U.S. with inflation at like 2.2 to 2.6%. By some views, 2.8%. Depending on which piece of crap data point you point to, right? None of these data points are right. There's people that say CPI overstates it. There's people that say it understates it. I'm in the camp that it understates it. So I think reflation is going to keep the stock market flying until the Fed realizes that we're approaching 4% on inflation again, 4.5%. And they have to dial it back a little bit.
It's interesting.
And I'm not even positive they'll do it.
That's interesting, because our script for the next 12 months is a manufacturer financial crisis, and then justification for QE.
Well, there you have it.
I believe QE is coming without question. Yeah, that's one of the reasons. That's my bull thesis on gold and silver. Yeah. And the second you see, and by the way, I don't know if you guys noticed Fed balance sheet. Ever since SVB, within the last year, it's changed slopes a little bit and is not declining at the pace that it was before. As soon as I start to see that click up a little bit, and they won't have announced any sort of formal QE, I'll believe as soon as they expand their balance sheet, that's when the race is really going to be on in gold, silver, and possibly even Bitcoin. Got any closing words?
I got one more viewer question I don't want to miss, because I like when they ask questions. What does that say? A bull, no bear? Is that what that says? AI bull, no bear? I'm not sure what the name of that person is.
So AI meaning artificial intelligence, is that trade still afoot?
Well, Albert? The question is thoughts on yen carry trade possibly restarting. I'm just going to comment on that real quick. I don't think every rally in the yen is the yen carry trade restarting. And I don't think every sell-off is the yen carry trade unwinding. What do you guys think?
You meant the other bit. I know what you mean, but
I meant the other way around.
I think today's what the new president or new prime minister, whatever you call him today, said. He's like, hell no, we're not raising rates, which that's not exactly what he said. I think is interesting.
Way to walk that back a little bit later.
He did walk it back a little bit too, but I think. I mean, the trade still makes sense. The only thing that ever didn't make sense of the yen carry trade was if it got too crowded. That's the thing that was going to push it over. But and we had that big day where it moved 5% yen versus the dollar, and it didn't ring any alarm bells and chase into the exits as much as I thought it would. I actually am not putting on this trade, but I would consider putting on a yen carry trade. Albert?
Yeah, I would put it on. I would put it on after the new year.
And it's funny because I think the dollar's shit. I just think the yen's worse. You know what I mean? I don't mind borrowing yen and buying dollars if I'm short yen. You know what I mean?
Yeah. Well, Janet Yellen used the yen to counteract China, so she was the one that helped direct it up into like the high 160s and whatnot, and that was a political move on her part. But now it's got to unwind. So I think after the new year, you might see that again.
Okay, Albert, tell the people where they can find you.
I'm on Twitter mainly, AM Live Mon. I'm on there quite a lot. Tony Nash and I started just a simple subscription service just to give a little bit more in-depth of stuff going on. It's really cheap, actually. It's called Cloak and Dagger, and the link's in my bio.
Oh, yeah. Well, I forgot to mention Cloak and Dagger the whole time. I love it.
That's okay.
Yeah,
we decided to, Tony and I decided to do it just because we used to love The Economist back then, way back then, right? And that's just gone. It's a political nightmare now. So we decided to go back to those old schools, political economics, and say, this is the logic and this is what's going on. And that's it.
Cool. Okay, this has been Tradiers, the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. A message to you guys. Remember, none of this works without you. The support you've given us on this project is amazing. At any one time, we've had between 3,000 and 8,000 live viewers watching this show. That's more than CNN gets in the day. We are out to destroy legacy media. We hate legacy media. This is personal with us, and we want you guys to help us. Please continue with the DMs. We want to hear your feedback, the retweets, and all the support you guys have given us. We humbly thank you. See you.
Thanks, guys.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.